Hello again there, fiscal masochists. Today's live stream is sponsored by something here. I know I said I wasn't going to do sponsors, but I wanted to do this one here because today's live stream is sponsored by existential dread and possibly burning your 401k because something awesome is going on right now, something I never thought I'd see in all the days of my life right here, something I never could have predicted, something I never could have imagined. And it almost goes against what I've been preaching and believing all this time here, and that is Bitcoin mooning and mooning hard like a streaker at Burning Man, while the global bond market is quietly convulsing in the background, like someone trying to hide a stroke on live TV. Never thought I'd see something like this here, because what I was expecting here is that crypto wasn't going to do anything at all until the 10-year Treasury came down. And I still kind of stand by that belief, but want to amend it a little bit here because it looks like something that I did not expect is occurring. Something incredible where it appears money is getting ripped right out of the bond markets. And I can't really say this for sure, but it looks like it's going into Bitcoin. I mean, I know correlation is not causation, but is anybody else seeing what I'm seeing with how Bitcoin is going up while the treasuries are going down, the bond market, the bond prices are all going down? That's what I'm seeing here. And my only thought is that money is just leaving one market and going to another. And it's so unusual because you wouldn't expect Bitcoin to go all the way up and tap 112,000 while a 10-year treasury yield is at 4.5%. It was also at 4.6 almost, 4.58, 4.6 or so back on Friday. Matter of fact, let me take a look at it here on the chart. I think this is just going to say what it closed at here. So let's do a quick screen share here with you guys. All right. So check this out here over on Fidelity. 4.5% on the 10-year treasury. What this would normally tell me in a normal world is that nobody is interested in stocks, nobody's interested in crypto, nobody's interested in any kind of speculative asset when you can make a guaranteed 4.5% in supposedly the world's safest asset. Nobody would be looking at risk on assets when you got that kind of money to be made. But there's another side to this story here with these treasuries. The reason their yields are going up is not just because the Fed was raising rates and hasn't cut them in a long time. And it's not because of inflation expectations either. I mean, built into these treasury yields is an inflation expectation. But another reason on why these yields are going up is because it has an inverse relationship with the bond's price. People are dumping these bonds and getting out of them because they no longer think the U.S. Treasury bonds are as safe as they once were. These were considered risk-free investments. These were considered safe. Now people are saying, you know what? These aren't safe anymore. These aren't safe anymore. We don't want to invest in them. We're not going to invest in them. That's what's happening here with these treasuries, which I find absolutely fascinating, that these are going down while at the same time, Bitcoin, its price is going up. Now, it is on a little bit of a retrace here from where it was earlier in the week. It was all the way up at 112,000. It went up and kissed it and then came down. But for the negative news that came out on Friday about new tariffs and everything, for it to go down just 2.79%, just $4,000, that's incredible. That is showing some serious strength here, that it is not going to be bullied by the threat of tariffs. And really, it shouldn't be. Like tariffs, you people that are investing in crypto, you should not give a good damn about tariffs, because you cannot put tariffs on crypto. They do not matter with crypto. So if you're sitting there hovering over the sell button going, oh, there's tariffs coming, I think I should get out, you're just an imbecile. You're just a complete imbecile if you think that. Because how does that affect Bitcoin? Tell me how it affects it. How does it affect crypto? It doesn't. It doesn't. You're just stupid. That's all it is. You're stupid. So thankfully, the stupid people, there's not as many of them, because it only went down from 112 to 108,000. That's showing a shortage of the stupidity that we'd seen in previous times, where a tariff was announced and people went, oh! We have a lot less of those stupid people, which is really what the function of bear market moves and the function of negative price action is supposed to be. It's supposed to take the assets out of weak, pathetic fools' hands and put them into stronger hands, willing to hold it at a lower price, as evidenced by the fact that they're buying it at a lower price. Now, how does this affect Pulse Chain? How does this affect our Richard Hart assets here? Well, we can see that it's down a little bit too. But I'll tell you, for like a day, this is not bad for supposedly a really bad day, where we're only down 4.31%. How are we doing on the 7-day here? Kind of flat on the 7-day. We're still up on the month. So even here in Pulse Chain, a lot of the stupid people are out finally. And that's what we want. We want all the stupid people out. We don't want people who are going to go, oh my gosh, tariffs, tariffs, tariffs. They have nothing to do with us, guys. You can't put tariffs on Pulse Chain. So get over yourself. Find another excuse. Now, back to the main story here. About the 10-year Treasury bond. You see, once upon a time, the U.S. 10-year bond was, I guess you could say, the Sydney Sweeney of global finance. It was the darling, the sweetheart, stable, admired, and the place to park your money when the world looked uncertain. Of course, there was a time that was maximum uncertainty, and the U.S. Treasury took a nosedive. I remember I was working as a bond broker at the time, and for the first time in my life, I saw absence of liquidity in U.S. Treasuries. Like some Treasury orders that I was placing were not getting filled. That is unheard of, because usually I'm so used to those things getting filled right away like that. But this one time, they were not getting filled. What the heck was going on? What was happening with that? Yeah, here's the deal, is that it's not what people thought it was originally. Everyone thought bonds were totally decorrelated from stocks. When stocks go down, bonds will go up. COVID taught us that that does not happen, because when you had the stocks go down 30% in one day, it wasn't that much longer afterwards that bonds took a nosedive as well. They went down real bad. And that's when the Fed had to step in, cut interest rates all the way down to zero to push them back up. But you got to also remember, there's forced buying and forced selling that occurs there, because most of the financial services industry is set up in a way where you have these mutual funds or pensions or managed portfolios that must maintain a certain allocation. Like pretend we have a allocation mutual fund that's supposed to be a 50-50 allocation between bonds and stocks. So you got your 50% stocks, your 50% bonds. Stocks just went down 30%. What are you going to have to do? You have to obey the charter of your fund and rebalance that allocation. So you're going to have to sell bonds now. That's forced selling. You're going to have to sell those bonds to rebalance the portfolio to put that money back into the stocks. So that's what happened there. And we realized, okay, yeah, bonds are not that safe. And again, we're realizing it now. Bonds are not that safe. And I can tell you this here, being a bond broker, bonds are not safer than stocks, because if a bond, like the idea was, well, when you buy a stock, the company is under zero obligation to ever pay you your money back, and that's true. But it's also kind of the same thing with bonds, because I saw some bonds go under, customers never got their money back. While they had a legal claim to go through the bankruptcy court with, they never saw that money ever again. It was gone. And even supposed safe bonds, because in 2016, Puerto Rico bonds were rated AA, and they were considered very safe. And then when the hurricane came and hit it in 2017, all those customers that had those Puerto Rico bonds never got their money back, or very little of it. So now we got a U.S. Treasury sitting at 4.5%, and nobody wants it. Not China, not Japan, not even domestic institutions, unless maybe they lost a bet. The bond market's gone from a risk-free return to return-free risk. Oh, and speaking of Japan, check this out. They're in trouble too. They're in some serious trouble, like possibly toast here. I mean, this could be like the worst circumstances that Japan gone. This is it right here. Look at this. Look at this chart. You know what this is? This is the yield on the Japanese 10-year Treasury. It's way back over here. See, where was it? Right here, the end of 2020, this was actually a negative interest rate bond. Now, not by that much, like 0.004 is the low it had for the day. So 5 years ago, less than 5 years ago even, this was a negative interest rate bond, and now it's at 1.526%. This is not just showing that bonds are not favorable to most investors anymore, but this is also going to kill a lot of other investments here too. This is going to hurt the stock market, because remember that drama we had back in August of 2024, the carry trade, which I think you can see it over here, the carry trade drama, about right here where it was going on. We had like such low interest rates from Japanese banks, where you could do an arbitrage trade, borrow money from Japan at a teeny little interest rate here, like a 0.5%, and then bring it over here to the United States, invest it in something that had a high interest rate, like our treasuries, and make guaranteed money. And then when Japan said, oh, well, we're going to have to raise our interest rate here a little bit, that caused a massive panic, because now the carry trade is no longer something you could do, or no longer something you could do profitably. There, we experienced a ton of drama, and now Japan's causing some more drama again. But what's really going on here? Is that the world is saying, and the investing world specifically is saying, we no longer have confidence in bonds. Now, does that mean that all these investors, they just take their money, stuff it in their pockets, or bury it in the backyard and go, oh, yeah, we're done. We don't need no more money. We don't need more money. We're happy with the dollar bills that we got. They're losing purchasing power every single second, losing 10% purchasing power a year. You really think that that's true? You really think that people are doing that? No, they're not doing that. I'll tell you right now, no, they are not doing that. They're saying, I want more money, and I want it now, and I want it somewhere else, and I know I'm not getting it from bonds, so put me in something else. What are they putting it in? Legitimate question. Let's talk about what they're putting it in. Is it potentially a asset that is currently undervalued and has a history of asymmetric returns? Maybe. But let's talk a little bit more about Japan, because you see, they invented the zero interest rate policy, and economic denial has been their lifestyle for a long time. You can see it in the 10-year yield that they had, where it went from a negative interest rate to 1.526% in just 5 years. That's not a gentle move, guys. That doesn't look like it's much. It's not a gentle move. That is sovereign financial panic, and that's trillions of dollars going through it right there. If Japan's losing control of their bond market, what hope do you think anyone else has? So why are people suddenly yeeting their cash into an asset that has historically been as stable as a squirrel on Red Bull, Bitcoin? Well, because here's the deal. Bitcoin is not acting like a risk-on asset anymore. It's acting like a refugee camp for capital. And we've seen this before. Back during the COVID crash. Remember, Bitcoin went down, but then stocks went down, and then bonds went down. And what was first to go up? Bitcoin. When bonds go down, people are scrambling, looking for something that they think is safe. And at that time, they actually thought Bitcoin was safe because we had a very steady run up throughout the rest of 2020. And the only reason bonds went back up was just because the Fed cut the interest rates all the way down to zero. That's it. There wasn't any investor saying, oh, yeah, there's value in bonds now. Didn't happen. So we've entered into an era of macro chaos, and people are buying Bitcoin because, not just because it's cool, they're buying it because they don't trust the governments, they don't trust the currencies, and now they don't trust bonds, which is supposed to be the grown-up in the room. But Bitcoin is now becoming the hardest money available. Because you see, it's not controlled by any state. It's not printed by any lunatic central banker, and it's not diluted every time some politician wants to get reelected by promising free stuff. And we know what happens here. When Bitcoin has its run, later the rest of the crypto market has it too. Because, like I said before, all these people that are leaving bonds, they're not going, oh yeah, we get my money out of bonds, and you know what, I'm content with the amount of money I have. I don't need no more money. No, people always want more money, always, always. That is a universal constant, 100% true, 100% of the time, is that people will always want more money and will never have enough money. Even the world's first trillionaire, when we have one, he's going to be saying, yeah, I don't think I have enough money. And they're going to constantly be wanting to get some sort of return on their money somewhere. They're not just going to bury it in their backyard. So once they have maxed out all of the return in Bitcoin, what do they do next? They move into the altcoins. And that is where you want to be in the altcoins that you bought at a low price. You were able to make asymmetric purchases and get the asymmetric returns. The altcoins that are considered leveraged positions on the crypto market itself. And that's what we're witnessing right now, a rotation. Capital is exiting the safe traditional system and is starting to go rogue. See, Bitcoin, it's not just a hedge anymore. Crypto is not just a hedge. Now it's a lifeboat, and that boat is leaving the Titanic. You can leave with it, or you can let it leave you. And I'm telling you, it's leaving. So if you're still holding those treasuries, hoping for a rebound, blink twice so I can send you some help, okay? Otherwise, now's the time to be buying up all your crypto. Get as much money into it now as you can. Now, I don't think that a dramatic move is coming just yet. Don't think so. I mean, what we do see happening right now is that bonds are bleeding, Bitcoin is absorbing the capital, and the entire global market system is going through like this great monetary regime change. It's not just a market cycle, this is a narrative shift here. This is something far greater than what we've seen before. But what I do see happening that is perhaps the most euphoric 6 months ever is going to begin sometime this year. I don't think it happens right away. Crypto 7, saw him on RH Max, and he was saying that the next 4 months are going to be like the months where we make the most money ever. I don't know about the next 4 months. I really don't. If I have to be as honest with you as I can be, I think maybe we don't get running again dramatically until September, which is good because it gives you a summer to buy as much as you need to. Because here's what I see. Let's take a look here at the the CMEs on interest rates. This is the June meeting. There's no rate cut coming there. Take a look at July. No rate cut coming there. They still think it's going to hold. September, we have the potential of a rate cut. And really, if we get it, it's going to be a small one. This is the first one where like there is potential. And I would not be surprised at all if the crypto market does not get running until September. Would not surprise me one bit. Let's see. We'll take a look at October. Historically, that's been a great month for us here. Possibly we get another rate cut there. It's really too early to go tell that far. December, we think it could be a potential here. Remember, these numbers, though, could change. But I do think it's very likely nothing gets moving again until September. Would not surprise me one bit. So now's the time to be placing your purchase orders, getting those in. And I tell you, this is what I said last time I was here. The assets that you want to buy, or the ones that I like to buy, I should say it like that, the ones that I like to buy, are these ones here. And you notice that Pulse X, Pulse Chain, they're at the top of the list here and everything. But these assets, I like these the best because they are under $1. I call them penny coins. All right. Now look at here, Sonic, you can get 2 for 1. You get a little more than 2 for 1 now. Ondo, the big BlackRock project that BlackRock loves, now that's under $1. See, I like this. I like these penny coins, is what I call them, because I only put $1 in, but then I get more than one coin. I call that an asymmetric buy. That sets me up to have more of these coins, more of these units of them. So when the bull run happens, I'm experiencing that exponential euphoria. Asymmetric buys, when you can, will set you up for exponential asymmetric returns. Now, new segment I want to do here today. I like to call it Shut the FUD Up. And here's how it's going to go. Whenever I see FUD of any sort, whenever I see trash talking of any sort, or somebody saying, oh my God, the bull run is over, or somebody going, oh, Pulse Chain is doomed, Hex is doomed, I'm going to highlight you here, and I'm going to point out how stupid your statement is, all right? And today's stupid statement comes from actually a member of our own community here. You all have probably seen this fella. If I can get my mouse to work. You've seen this fella here, Stylo. He says the Pulse Chain community refuses to acknowledge one thing. Their marketing sucks. We are stuck in an echo chamber, and you are all too stupid to realize it. You know, what a great way to get people on your side here by calling them stupid, right? What a great way to make a point to them that they're going to take to heart. He goes on to say, you spend all day, every day, actively shilling your bags to people who have your bags. Please figure out the algorithm. I've tried for a year now to get you guys out of the echo chamber, but nobody listens. So I responded back to him and said, hey, marketing doesn't matter. And then he sends me this. He goes, oh, thanks, I needed a laugh. Now, why did I say marketing doesn't matter? Because the coin's not easy to buy. And that's what I put there. I said, hey, you want to help the price chart? You can do one of two things. One, you can buy more of it. Or two, find some way to make it easier to buy, like a fiat on-ramp, or something as simple as Coinbase. Help us get an exchange listing, somewhere where we can send people where they only got to do 2-3 clicks to buy it. And we're set. We're in good shape. We're doing all that is than any stupid postcard campaign that people are going to get in the mail. They're going to get their postcard, and they're going to be like, what's this? I don't know what this is, and throw it away. That's what's going to happen with all those postcards that people are wasting money on. So stop doing that. Now, I invited Stylo on. I'm not trying to knock him here or anything. I invited him on. I said, hey, I would be happy to have you on my stream here where we could debate this issue and have the battlefield of ideas. And what he responded was, he said, I will not be used for content. Hey, you're being used for content right now, brother. So enjoy. Yeah, and he had told me, oh, well, there already is fiat on-ramp. We've had it for a while. And I said, well, if you're referring to Xcoast, that is not easy. I've tried onboarding people through it, and They complain about how many steps and how much difficulty is involved in it, and they just quit. And that's true. I mean, I love you guys at X Coast, but you got to make it easier. I mean, going through that process of like connecting up through the Old Glory Bank and everything. I transferred money to the Old Glory Bank. I only transferred like $50, thankfully, and it never showed up. It never showed up. What the heck was happening? So if you think that that's an easy on-ramp, it's not. We need an easier one, or we need an exchange listing or something. That's what we should be working on, is a better on-ramp or a better exchange listing and something that we can easily point people to for our onboarding. Because right now, telling them, well, first you send some money to Coinbase, guys, some USDC, and then you send that to a MetaMask. If you don't have a MetaMask, you're going to have to install it. You're going to have to come up with a 12-word seed phrase and memorize it, write it down, make sure nobody else sees it, or else you lose all your money. And then you got to add the Pulse chain into there manually. And then you go to this website, you download this software on your computer. You see, this is way too many steps. This is way too many steps. And you think that people are going to be able to do this? You think that noobs are going to be able to do this? I mean, noobs is who we need. We need new money in crypto to make crypto go up. And what Stylo said in response to that was, oh, I'm sorry, people are stupid and lazy. Oh, what a great way to get people into your chain right there. Call them stupid and lazy. That's going to work out wonders for us here. And so I said to him, wait a minute. I got to pull up the rest of my responses. Said to him, that's where the majority of money is, outside of crypto. But that's not what he said. What he said here was this here. They said, sorry, people are stupid and lazy. So I said, call them what you want, but these are the people you say we need to market to. See, he just changed his tune right there. He just changed his tune. He's like, we need to get people outside of the ecosystem. These are the people that we need to market to. You said it yourself. They really want to buy our coin now that you've insulted them, haven't they? But they have no trouble buying Bitcoin because that's easy to buy. So if our coins were as easy to buy, we'd have better price action. So thank you for proving my points. Yeah, he changes his tune once again. He says the people we need to market to are not people who don't know how to turn fiat into crypto. I'm not looking to market to people who have never touched crypto. The issues with that are countless, and I'm not interested in holding people's hands. And I was like, well, that's where the majority of money is, outside of crypto. And then did he respond or anything to that? I don't know. But it doesn't matter. The point is, unless we get new money and new people here into crypto, there's not going to be any price action going up. It all requires new money. That's why I keep saying the oversaturation of the market with new coins doesn't matter, because the majority of those coins are not available where 99% of the money, the new money coming in, is going to be. 99% of the new coins saturating the market are not available where 99% of the new money is coming from. We don't have to worry about all the crap on pump.fun. All the new money's not going to go straight there. But here's our problem. All that new money's not coming into Pulse Chain either, because if we don't make it easy to get into Pulse Chain, we need to make it easy to get to Pulse Chain. We need to. Or else we're just not going to see the new money come in here. So that should be the community's priority. It should not be begging Richard to stream again. It should not be the Interpol notice. It should not be sending out stupid postcards. It should not be marketing. Or however you think it's done. It should be getting an easy way to buy the coins. And if anybody wants to debate me on that, open invitation. Come and debate me on that. I will gladly enlighten you. I will gladly show you why that is correct. If anybody thinks that there's a better idea, well, I'm all ears. I'm all ears. Come tell me. Come tell me. I'm happy to admit when I'm wrong. I just admitted I was wrong today here about the whole bonds need to come down here before crypto goes up, because it looks like bonds are coming down and the money that's coming out of bonds is going into crypto and pushing crypto up. So you think you got a better idea? Hit me up. Reinvent Ideal on Twitter, or just send me a message on here. Cairo out.